What up, what up? Thanks for hanging out here with me, folks. This is time for another video, part of the Trading Quotes series. This is my third book published in 2022. I'm really proud of the book, and as you know, I've been making it free here on my YouTube channel, Ched's Trading. All you have to do is go into the Trading Quotes playlist, and I've got a lot of the book done so far. I think, look at that, we're all the way through week 39. I've just got 40 through 52, and then I do the wrap-up of the favorite quotes part 3, and the whole book is free. I love this. It's one quote every day, 365 days a year, trading, emotional management, trade identification, stuff like that. Of course, Big Cheds on Twitter. Find me in Big Cheds at Twitter. I put out a lot of stuff. And of course, I'm a founding analyst at Bitcoin Live. I've been doing that for 8+ years. Really proud of that team. So let's jump right into it. We're here for Trading Quotes, and we're going to start out with week 40. So I like that with this series, and these quotes, I tweet them out all the time, but this video series allows me to extrapolate. It allows me to explain, to add more context, to add more nuance, and I think that's of great value, so I'm glad you're here. So for week 40, Monday, do yourself a favor and ignore other traders' charts if you believe in your own analysis. One of the biggest mistakes you can make is to second guess yourself. This can happen all the time where you're getting ready to take a trade and you've been doing all this work and you're doing all this research. Then all of a sudden, somebody tweets out something and it goes against what you're thinking. Now you're like, wait a minute. Do I have this wrong? What am I missing? And now you have this uncertainty, this doubt, and you have now you have nothing. You're left with nothing, because unless you have confidence, you have nothing. You can't execute your plan. You won't really be able to manage, the ups and downs of the price action. So I honestly, if I'm trading something, I really don't want to hear what anyone else has to say about it. It's like some people go and let me just search Twitter. Let me see what everyone's saying. No, I'm the exact opposite. You need to believe in your own analysis. These need to be ideas from your watch list, plays you've watched closely, you understand the nuance of, and you just don't want to get in a situation where you're that blade of grass, blowing in the wind, where if someone says something, you're just going to change your mind. So you need to believe in your own analysis and just really honestly try to ignore what other people are saying, other traders especially, okay? I know this is hard if you're a new trader, but you have to learn how to come up with your ideas that you validate, and then you accept that. It's also way easier to accept, what happens, win or lose, if it's based on your own methodology, okay? Now, Tuesday, those who treat trading like a hobby, they'll be looking for a new hobby soon. Yeah, sure, trading can be a fun hobby, but the whole idea of a hobby is, it's for fun. Whatever happens, happens. So if you treat trading that way, if you're casual, if you're cavalier, about it, you're not going to care what happens to your money. Oh, oops, I lost my money. Oh, well, it was just a hobby, right? And if you treat it that way, if you treat it like a hobby, what's going to happen is you'll be looking for a new hobby soon, because your money's going to be gone. You'll be like, this sucks. I hate this. I thought all I had to do was buy this, dog with hat coin or this whatever, and I'll get rich. So it needs to be a lot more than a hobby, something you take seriously, something you practice, something you study, you have methodology. And of course, you're using a trading journal. Wednesday. Now, an opportunity, that is something you know when you see it. Everything else is a forced trade. Something's beautiful. You know it right away. When you see it, you like something. You know it right away. You like how something smells. You know it right away. Like, it's this instinct, that instant feeling. And that's how a good trade, an opportunity should be. It should be so clear. Because if you find that you're looking at it, you're not sure, it doesn't quite line up, maybe not, just avoid it. You need to be moving with conviction, or don't move at all, right? Every trade needs to be full confidence. You know what to do. And if you don't have confidence, don't take the trade. If the chart picture is not clear, if the chart levels are not clear, that's a forced trade. So an opportunity, man, it should jump up and hit you right in the face. It should be a real thing. That's what you take. Take the major opportunities. And for the rest, just sit back and wait. Be more patient, be more selective. Okay? Thursday, there are two types of traders. Maybe there's more, but for this quote, there's only two. Those who see oversold and they buy, and those who know how to trade with the trend. Now, oversold, most people think of oversold in the context of the RSI, right? The relative strength index and the bounded oscillator. And I've got videos on that, and specifically in oversold. But really, it just means like intuitively you hear, like what's overcooked? Like it's cooked too much, right? So you hear oversold, you think, oh, it's sold too much. I should buy it. But the problem with that is the biggest price drops, they actually come when something's oversold, right? The only way to become oversold is to be bearish, and trends tend to continue. So you actually would rather buy when it becomes out of oversold because you have some momentum, a little bit of a trend reversal. So you really want to trade with the trend and avoid that thinking of, oh, it's overbought, I should sell. Because, the biggest price gains come during overbought. And the same thing is true here in oversold. So you don't want to buy oversold. You want to buy when it leaves that oversold condition, right? You want to ride a trend, okay? Now, Friday, an often overlooked part of successful trading is studying the charts ahead of time. If you take that time to scan your watch list before the week starts, and this is, equities before the week starts, crypto's 24/7. If you take the time to scan your watch list before the week starts, you will be in a much better position to capitalize on an opportunity when it comes your way. And many of these quotes are tying in together. But you're trading from your watch list. You're trading from something that you've studied, you have muscle memory on, you have a feel for. And you understand the context of a price movement. It's interacting with major support or resistance. The price is trying to break out. It's on the weekly 50. It's on the weekly, 200. And so by having that work done ahead of time, then you can react and know how to put into context what these price movements mean. So make sure you're studying, make sure you're putting in that work ahead of time, and that's really gonna help things pay off for you. Okay. Saturday, comparison is the death of joy. Now, this first part is a pretty common quote, but I've connected it to trading, and basically, don't get stressed or upset when you see another trader doing better than you. The only competition that matters is you against your own potential. And so that's the point, is you have your life to live. You have your path to walk, and you can only be as good as your own maximum potential, not someone else's potential. You don't know what their life is, what their needs are, what they're spending, what, the risk tolerance. It's just, why compare yourself to someone else? It's their life. They have their path. And at the end of the day, you can only be as good, I said, as yourself, right? So make sure that you are focused on the competition that matters. That's you against yourself, and comparing yourself to how you had been before. How were you last week? Are you getting better? Are you putting in the work? And are you moving, in the direction that you want to move? Sunday, just imagine how you would do if you based your trades on the larger trend rather than these day-to-day narratives of why the price is moving up or down. There's this need almost, I think I've seen in financial media, to want to explain every move, right? There's this need to, the price is up 1%, the price is up 2%, right? Because of, you see it in financial media where you see the headlines, such and such is up on this, but there's like no connection. A lot of the time they're just throwing stuff at the wall and trying to add a narrative, but these narratives are malleable. These narratives are malleable. That means that you can move them around. They can be used in different ways. Like, what's the point? It's just words. Words are wind. According to the great author, George R.R. Martin, words are wind. It's just matters is what the trend is what matters, and the price interaction with key levels. And you should be basing your trades on that larger trend. That's what you should do, not what someone says of why the price is moving up or down. That's just a desperate attempt to explain what doesn't need to be explained, right? Just throw your narratives out the window and focus on the price action. All right, week 41. Folks, this is for Trading Quotes, my third book. I'm really into right behind me there, Trading Quotes. I'm really happy to share it with you folks. So week 41, Monday. Think about what you want to play after the market settles down from a flush. Identify what was bullish beforehand and target that. So what you want to know always, I think always, is what the best charts are in any sector, or on your watch list, what the strongest stuff is on your watch list, because there will be times when the entire market flushes, the entire market drops. You don't need to know why, it doesn't quite matter, but at some point the market will recover, all recover together, but there's varying degrees, right? The relative strength players, those are going to hold their higher lows. Those are likely to continue because they were strong beforehand. So you always want to have a good sense of what the relative strength players are. And you target them. You target them on a market-wide flash, a market-wide drawdown, and ride that relative strength. Tuesday, this is important. Self-doubt, no good, right? Tuesday, more often than not, what we visualize and we think about, it tends to happen. So with that in mind, you should envision yourself doing well and succeeding in your trading life. Be your own best friend rather than your own worst enemy. I mean, if you're just convinced you're going to fail, what's going to happen is you're going to find a way to fail. And it might even just be self-conscious, subconscious. You might not even realize it's happening. And so why not give yourself a chance? Why not give yourself a little break and say, you know what, I can do this, I will do this, and not blind enthusiasm, but you're encouraging yourself to keep trying and to work hard. Because if you're just convinced you're going to fail, you'll find a way to fail. You'll find a way to make that failure a self-fulfilling prophecy. And you really want to be careful with that. And if you find yourself thinking this way, honestly, just take a break. Step back, take a break, and really make sure you're using that trading journal, because the trading journal will help you kind of notice and pull out these bad habits, okay? Now, keep grinding. Wednesday, keep grinding. Don't let anyone tell you that you cannot get to where you want to be. Other people, they love to put you down. They love to put you down. They've already climbed up the ladder. They're going to kick away the ladder. Or they're failing, so they want you to fail. And just people are going to be negative. And, you have to walk your own path. You have to manage your own journey. And if other people are telling you suck, you're not going to make it, you need to ignore them. You need to find a different group of people, Find people that are going to support you. If anything, take these negative comments from other people and use them to help you work harder. Use them as motivation, to fuel if you want, to prove those doubters wrong. But just don't let anyone else run you down, okay? Really, really important. Be really careful with that, okay? Now, Thursday, most trading mistakes happen because people start out with too much size. Smaller positions, they're easier to manage. Bottom line. Well, why is that? We are emotional creatures. And if you're just trying to hit a home run, if you're trading your whole bank account, your whole trading account in one trade, you're going to mess it up. I mean, how do you not get nervous with that? There are all these bankroll rules, poker, trading designed to help you manage volatility and deviations, and it's where your trades are no more than 2 or 3% of your bankroll, something like that, some amount that makes sense to you. But this is why I always recommend, I coach that you should scale in and scale out of your positions, because when you take a little bit of profit or when you take a little bit of a loss, that remaining position is just easier to manage because it represents a smaller percentage of your risk assets. So make sure you're not starting out with too big a position size. It's just going to throw you off, okay? Friday. Just because you played the last trade poorly, it doesn't mean you have to play the next one the same way. Learn from your mistakes rather than letting them haunt you. So it's going to, again, become a self-fulfilling prophecy. If you've messed up in the last trade, if you find yourself convinced just because you had a bad trade that the next one's also going to fail, you need to stop. You need to immediately take a break and come back with a clean slate. And you should be journaling all of this. These mistakes are critical and you have to learn from them, right? You have to build up a library of mistakes that you've made and that you've hopefully learned from. And again, hopefully these are new mistakes, not the same mistake that you keep repeating over and over again. Then you're going nowhere. Then you're spinning in circles. So you need to remember that you can make a mistake and then it's clean. Try again, ready to move on, as long as you've absorbed the trade that you lost. As long as you've learned from it, you've processed it, and now you're ready to move on. If you're just sitting there thinking about it and it's haunting you, you are cooked. You're in big trouble. So now Saturday, this is fun. If this is your first bear market, hopefully it won't be your last. Survive. And so that's the point where, what does that mean? Well, if you don't want it to be, you want to be in multiple bear markets, who wants to do that? Well, that means you've survived the bear market and you've gone all the way through a bull market and you're back to a bear. So you need to know that the markets will go in cycles. And if you can survive the bear market, then you'll have opportunities in the future. And this is just a way to say, make sure this bear market doesn't knock you out. It doesn't take you out of the game. So make sure you survive and make sure if this is your first bear market, make sure it's not your last. Sunday, if you keep changing time frames to suit your bias, you should immediately exit the trade. This is a big one. Be careful of it. And I found myself doing this a lot in my early trading career. I was in a trade based on like the daily chart, and then it broke the support level, and so I dropped to the 4-hour, and then it broke that support level. Now I'm dropping to the 1 hour and the 15-minute. I'm just moving around time frames, trying to convince myself that to hold on to the trade just because I didn't want to take the loss, and it's a huge mistake. You need to pick a time frame and stick with it. Pick a price level, pick a confirmation level, and stick with it. And if you find yourself just moving around time frames to justify, sticking with the trade, you should know better. And in the back of your mind, you know that you're doing the wrong thing. So just immediately exit the trade. Week 40 and 41, we'll do 42. We'll do in 42 and 43 next time. And this entire book, Trading Quotes, A Daily Dose of Trading Wisdom, will be free for you. And I'm really enjoying this. If you haven't yet, make sure you check out the Trading Encyclopedia. I've got hundreds of videos now, over 440 videos, 3 to 4 minute videos just for you. I'm really proud of it. Hopefully you're checking that out. I'm on Twitter at Big Cheds and Bitcoin Live, where I am a proud founding analyst. This is, of course, part of the Trading Quotes series from my book, Trading Quotes, available on Amazon and free for you here on my YouTube channel. Really appreciate you folks. Thank you for staying here with me. And I hope you're enjoying this video series. And I will talk to you soon. Let's dance to the Church of 8 Wheels. Let's do this.